Hi dear students and listeners. Today is our next meeting with you. I am Aydınov Şehriyar from the Department of Accounting and Auditing. So our today's topic is for third year economic students. As you know, our subject is a non-specialty subject for third year economic students. So I will try to explain our today's topic as concisely and concretely as possible. So also I am sorry for my possible mistakes. Let's look at our today's topic. The name of topic is Audit of Capital and Reserves. There are 4 plans on these topics today. The first of them, Audit of Authorized Capital. Second one, Audit of Reserve Capital. Third one, Audit of Additional Capital. And the last plan for today is Audit of Retained Earnings. So I think that there is no need for bibliography because it's the same as our old topics. So if you want to see the full list of bibliography, you can watch our previous videos and previous lessons. So let's start from our first plan. Again, you see the name of our plan, Audit of Authorized Capital. So I think many of you know that each enterprise must have an authorized capital when established this company. So let's look at the definition of authorized capital. Authorized capital reflects the sum of shares in monetary terms contributed by participants to the property of the enterprise when establishing the enterprise. What does it mean? For example, there are 5 shareholders and each of them, of course, must give some amount of shares to the property of this enterprise. So sum of them is called authorized capital. But of course, in monetary terms, it means that in money form. As you know, there are 2 forms, monetary form or non-monetary form. But in case, we must use in monetary terms. Okay, let's continue. The process for establishing the authorized fund must be regulated by legislative, it's so important, and constituent documents. You may also call constituent documents as founding documents. These are the first documents of any enterprise, so we call it founding or constituent documents. And what does it mean? For example, if you want to establish any new company, of course you must have constituent or founding documents, and of course there must be written the amount of your authorized capital. So let's continue. There are 2 main information sources for this checking process. There are 2 accounts for this checking process. One of them is 301, you see authorized capital, and the second one is 302, unpaid part of the authorized capital. Of course, we'll talk a bit more about these accounts in next slide. So let's continue. Okay, I want to talk about these accounts a bit. The first part, the balance of the account 301, it means that it must correspond or it must be proper to the amount of the authorized fund specified in constituent documents. And let's explain this sentence. For example, in our founding documents or in our constituent documents, it's written that $5 million authorized capital we have. So it means that in the account of 301, we must see the same amount, $5 million. Okay. If you want, you can make changes. You can make entries in this account, of course, but only in case of increase or decrease of the authorized capital. But pay attention, please. I want to say one important thing. If you want to increase or decrease the amount of your authorized capital, you must do the same relevant changes in your founding documents. Just after this process, you can increase or decrease your authorized capital. As you see, we can read that increase and decrease of authorized capital with the relevant changes are made in the founding documents of the company or enterprise. So, I want to continue talk about these accounts, but let's say that there are 2 important stages about the calculation of authorized capital in these accounts. The first stage is about state registration. After the state registration of the enterprise, its authorized capital is reflected in credit of accounts 301 and in debit of accounts 302. It's the first stage. But the second stage or the final stage, when you actually receive the founder's shares to your property of enterprise, then you must write or reflect this amount in the credit of the account 302, unpaid part of the authorized capital, and in the debit of other accounts like assets. We can give an example for this part in next slide. So let's continue. For example, the company is registered with an authorized capital of 150,000 manat. The authorized capital was in the form of 100 manat in cash and 50,000 manat in the form of property. What does it mean? Again, I want to explain the difference between cash and non-cash or non-monetary forms. Cash, it means money, just simply money. But in the form of property or in non-monetary form, it means everything but not money, everything else money. So let's see the table about this calculation. The first transaction called formation of authorized capital. Again, I want to say that it's not actually a receipt of these shares to the enterprise. This is just formation of authorized capital. So you must write this amount into debit of 302 account, unpaid part of authorized capital or nominal capital. But you must write this amount to the credit of 301, account number 301, nominal or authorized capital. As you see, we can see all amount, 150,000 manat. But let's continue. When you actually receive the founder's shares to the bank account of our enterprise, so let's look. Receipt of the amount specified in the authorized capital by the founders to the bank account of the enterprise. Then you must write down it to the debit of 223 account, bank settlement accounts, and credit of 302. Unpaid part of the nominal or authorized capital. But just pay attention, the amount is 100,000 manat, because this reflects just form of cash, just monetary cash, monetary form. But if we continue, we will see that receipt of the property specified in the authorized capital. Pay attention, no money, just property. You must write down into debit of 111 land, buildings and equipment value account, and again to the credit of 302 unpaid part of nominal or authorized capital, and you will see the amount 50,000 manat. Okay, monetary and non-monetary forms, and you can see the sum of them 150,000 manat. It was just an example about calculation of authorized capital or settlement of authorized capital. So let's continue with our next slide. Okay, in this slide I want to talk about the factors that auditor must examine or must check up during the checking process. Let's look at them. The first one is the charter of the enterprise, and I think it's the most important one, because all rules, all methods, or all ways about increasing or decreasing authorized capital or all another things must be written down in the charter of enterprise. So it's the most important factor. Auditor should examine it first of all. So let's continue then. Agreement on establishment of a limited liability company, LLC in short form, or agreement on the establishment of a joint stock company. Actually, there are some forms of companies like a limited liability company, like a joint stock company, open joint stock company, and etc. So, of course, there must be different agreements, different contracts between states and these companies. So, you see the list of them or examples of them. Okay, the next factor is state registration certificate. Again, it's important because when an enterprise registers, so it must get a state registration certificate to take action to start. Okay, the auditor should examine, should check the correctness of this certificate. Then, registration certificate in tax authorities, statistical bodies, and other bodies of our state. What does it mean? As you know, each enterprise must send a copy of their financial statement to the statistical bodies or tax bodies or some other state bodies at the end of reporting year or reporting period. Okay, and the last one, other orders and directives. This means that some other orders or directives that are necessary for an enterprise when it's established. So in this slide we can see the factors or the list of things that the auditor must check up, must examine during the checking process. Okay, I want to return back to our plan. For our today's lesson, the first plan was about audit of authorized capital, and I tried to explain it shortly and concretely. So let's continue with our second plan, audit of reserve capital. Okay. You see the name. And how can we obtain reserve capital? How can we form it? Let's talk about it. The only source for reserve capital is deductions from our net profit. But you can see the definition. The only source of formation of reserve capital in economic societies like LLC or joint stock company and etc. is deductions from net profit. So in this case, I want to explain the difference between income and profit for you. Many of you know about that. Profit is different from income. When our production costs or some other costs are deducted from income, so we get our net profit or profit. So our reserve capital can only be obtained from our net profit, not from our income. It's so important. So let's continue. If the charter of our enterprise does not provide or does not allow for the creation of reserve capital, so we cannot create any reserve capital. What does it mean? It means that if you want to create any reserve capital in future, so you must write down in your charter of enterprise an article about reserve capital, use of reserve capital, form of reserve capital, or some other factors. Okay, let's continue. Again, in the checking process, what areas will be checked by auditor? Let's see the list of them. The first one, reserve capital must be obtained from the retained earnings of the previous year. Retained earnings from the previous year. It means that not the earnings or not the profit of this year, just retained earnings of the previous year. Okay, let's continue. Reserve capital should not be less than 5% of the authorized fund. But I want to say one thing, that this amount of 5%, it's optional. It can change. It means that it's not forced percent for all companies or societies. Just it's an advice that it should not be less than 5% of your authorized fund. But of course, it's up to you. You can change this percent. You can increase or decrease this percent. Okay, reserve capital must be obtained from the net profit remaining in the enterprise after taxes. Again, the same thing. I have already explained about that, a difference between our net profit or our income. Reserve capital cannot be obtained from our income, just it can be obtained from our net profit. You can see net profit remaining in the enterprise after taxes and some other costs. Okay, so we have learned that there are three main factors that auditors must check up during checking process. Okay, let's continue with our next slide. In this slide, we can see for what purposes we can use our reserve capital. Okay, let's count some of them. Compensation for company losses. You know that each enterprise or each company may have unexpected or sudden losses in its action, so we can compensate our losses at the expense of our reserve capital. So it's widely used, this first factor is widely used by all companies or enterprises. Okay, let's continue. Payment of the company's obligations. Obligations, it means liabilities. You know there are two types of our liabilities, short-term liabilities or long-term liabilities. We can call it obligations also. So you can pay your liabilities at the expense of reserve capital again. Okay, the third one, repurchase of shares in the authorized capital of existing owners in cases provided by law. How can we give an example for this one? For example, there are 6 shareholders in joint stock company, and one of them wants to leave this company, and of course he can repurchase of his own shares when he wants to leave this company, but of course in case provided by law we must talk about it. So the next one is targeted investment. Of course you know what's investment. In this case you can use your reserve capital as your targeted investment to bring more income in future for your company or yourself, and I think it's one of recommended factors for the use of reserve capital, because when you invest some amount of money or capital, it means that you can get more income in future, so it's a good one. And last one, we can give an example, planned purchase or planned getting of land, buildings and equipment, materials, or simple we can call it assets. You know that we used to call it assets, but in new accounting system we call it land, buildings, equipment and etc. But I want to say one thing, that all these factors are optional. Your company can use your reserve capital, for example, for compensation for company losses or another purposes you see here. But the purposes of using the reserve capital, these purposes, are determined by law, and the right to use them belongs just only to supervisory board of your company, your enterprise. You see, supervisory board of the joint stock company. So our second plan, our second chapter was about reserve capitals, and again I explained it shortly and concretely. So let's continue with our third plan. You see the name again, audit of additional capital. I think its name is so clear, so you can understand what does it mean, additional capital. So let's look at how can we get this additional capital, from which sources we can get additional capital. The first one, by increasing the value of the property as a result of the revaluation. What does it mean? For example, as a result of our first valuation process, this property's value is $2, for example. But as a result of our revaluation or our second valuation, the value of this property increases and becomes $3. So there is a difference, $1. This $1 we can add to our additional capital. It's the explanation of our first factor and first sentence. So let's continue from the second one. You see, by receiving the amount received from other enterprises or other persons free of charge. Of course, we can give an example, also state subsidies. It's also free of charge. So what does it mean? It means that you can get any gifts from any enterprises, any persons, free of charge. It means that you don't pay anything for it. And it's also your additional capital. Okay, the third one. At the expense of the amount, issue income, we call it issue income, arising from the difference between the sale price and the nominal value of shares in joint stock companies, when they are sold in a price higher than their nominal value. And let's explain it with the help of example again. For example, I am one, not like that. Let's give an example like that. For example, a company wants to sell some part of its shares. The nominal value of shares are $2 million. But when you want to sell these shares, you sell it to 2,000 and for example, $2.5 million. Their difference than $500,000. I'm sorry. So this difference is called additional capital. Okay. So you see that there are three main sources to form our additional capital. So the main information sources during the checking process of additional capitals, it's the account number 335, named other reserves. And the creation and completion of additional capital is reflected in the credit side of account 335. Okay, let's continue. And again, we want to look at the list of factors that audit must check up the correctness of usage of additional capital. Which purposes? Let's look at. The first one is again compensation for impairment losses on assets during reassessment. We have talked about it. We have said that maybe there are difference between first valuation and revaluation or reassessment. But we gave you an example that increasing. But in this case, we want to talk about decreasing after revaluation or reassessment. For example, $3 as a result of first valuation process and $2 as a result of revaluation or reassessment process. So there's minus $1 difference between these two valuation processes, and you can compensate your impairment loss at the expense of your additional capital. So let's look at second factor, second one. Increase of authorized capital at the expense of additional capital. We have talked about it also. Remember, we have said that you can increase or decrease your authorized capital, but just only after making relevant changes in your constituent documents or founding documents. So you see, after making necessary changes in the constituent documents. Okay, it means that you can also use your additional capital for increase of authorized capital. It's clear. The third one, compensation of losses of the enterprise at the expense of additional capital. The third one is the same with the purpose of reserve capital. We have mentioned about it. For example, compensation of losses. You can compensate your losses at the expense of your reserve capital, also at the expense of your additional capital. And the last one, payment to shareholders at the expense of additional capital. It means that, for example, you have $1 million additional capital and you can just distribute this amount of money among your shareholders. But I think it's not one of recommended methods, because when you distribute your additional capital among your shareholders, it means that this money will not bring more income for you in future. But for example, in other cases, you can get some more income in future. So it's my own opinion that the last variant is not recommended for joint stock companies and etc. Okay, the third plan was about additional capital, audit of additional capital, and usage of additional capital. And our today's last plan, I want to show for you, audit of retained earnings. So let's continue with the explanation of this one. Okay, you see the name again, audit of retained earnings. So how can I explain it for you? Okay, authorized capital, reserve capital, additional capital, and the last one is retained earnings. These all are called your private capital, and it's one of them. It's one of parts of your private capital. And how can we get retained earnings? You know that during the reporting period or reporting year, you can have some loss or some income. But if you have income, or if you have profit, it's reflected in account 801, gross profit loss in credit side. But you have a loss in your reporting period, you can reflect or you can write it in the debit side of account 801, gross profit or loss. And at the end of year, when you want to approve your balance sheet at December 31st, you see there, you must deduct this amount of money from 801, this account, to 343, account number 343, named retained earnings or uncovered loss for previous years. Okay, it means that during the reporting period, all your profit or loss is written in 801, But December 31st, at the end of the year, you must deduct this amount of money to 343 account retained earnings for previous years or uncovered loss. So, how can we use retained earnings? For which purposes we can use retained earnings? Let's talk about it. Generally or usually, it's recommended that to use your retained earnings for your reserve capital. It means that transfer all amount of retained earnings from previous years to your reserve capital, because reserve capital can bring you more income in future. But how can you use or expense retained earnings for other purposes? For example, let's see this paragraph. Usually at the end of reporting year, after the required amount of reserve capital, I said this one, is deducted from the net profit remaining in the enterprise. After this process, the remaining profit is distributed among the shareholders. But again, I don't recommend this variant, because again, I want to explain it for you. If you distribute your retained earnings just among your shareholders, this amount of money won't bring any income for you in future. But if you transfer this amount of money to your reserve capital, it can make or it can bring income to you in future. So let's read our last sentence. If your retained earnings are distributed among shareholders, so this type of income for shareholders is called dividends. And dividends must be remaining profit after tax. So it was our last slide for today's lesson, and I want to remind that our subject is a non-specialty subject for third year economics students. So I tried to explain our lesson shortly and concretely, but of course if you are a student of Department of Accounting and Auditing, you can get much more than our lesson from our online sources or from our online lectures, sites, and etc. And it was the last sentence of our today's lesson. So I'm sorry for my mistakes. Thank you for your attention. See you soon.